Hello there. Welcome back to Elements in Focus. It is year end, and tis the season for tax planning discussions, the fireside chats, if you will. And we're going to talk about year end tax planning. We're going to do it in a three-part series. So, part one, the basics of effective year end tax planning, is what Aaron and I will cover today. So, looking forward to this deep discussion on tax planning. We're going to, again, the three-part series, we're going to be covering part two and part three next. And here, Aaron's going to kind of cover the basics of year-end tax planning, some terms we want you to think very clearly on and understand, and then really, how do we understand your tax situation? How do we want to look at credits and deductions? And then finally, how do we start looking at harvesting some of those tax losses? But Aaron, enough without further ado, my friend, you're up. Director of Financial Planning, everyone, Aaron Rheaume.
Thank you, Grant. As he mentioned, we are going to go through a three-part series. But before we get into the weeds here, let's just describe the difference between tax planning and tax reporting. Tax planning are proactive strategies that you need to implement prior to the end of the year. So when the clock strikes midnight, December 31st of this year, tax planning strategies, most of those are over. Tax reporting is what you're doing prior to the filing date, April 15th of 2025. So as we get into the basics of effective year-end tax planning, one of the things that you need to know is understanding your income and taking an analysis of where that's at. So we have a stair-step system in the United States. Those are called marginal tax brackets. They start at 10% and go up to 37%. So understanding where your income will fall on that marginal stair step allows us as advisors to know what rules you're playing. So what sandbox can we play in from an income standpoint? The next thing is making sure that you're doing enough deductions and tax withholdings, and making sure that you have taxes that are being withheld out of paychecks, or if you're self-employed, making sure that you're paying quarterly estimates and having those in line. And then we move on into more of the basic of the tax return in itself, and that is understanding whether you're going to take the standard deduction or actually itemize your deductions. Itemizations are medical expenses over a certain percentage of your AGI. State and local tax, there's a cap on that of $10,000. Mortgage interest can be deductible, and any sort of charitable gifting. And then pay attention to some of the credits that you get in your state. So what are credits that we can get? Are there child tax credits? Do you get a credit if you contribute to a 529 plan? Here in the state of Indiana, you can get up to a 20% tax credit on a $7,500 contribution. And then lastly, looking to see where your capital gains or capital losses are prior to year end. Maybe you can offset some of those gains by harvesting losses. And what I'm talking about is inside of your investment accounts that are subject to taxation. So not necessarily your Roth IRA or even your tax deferred regular IRAs, but if you have investment accounts that you can get capital gains, dividends, interest, making sure you're potentially harvesting some stocks that were underperformers to offset the gains using losses. Grant, we covered a ton of stuff in a short amount of time. In the next video series, we're going to dive a little bit deeper into some different strategies, but I will turn that back over to you to wrap up.
Absolutely. And to follow in sequence with this discussion we're having here with all of you now, there are articles that will go into deeper points that Aaron brought up. And so the three-part series we'll cover today and in our next conversations will also have supplementary material you can look at. If we're if we're looking at addressing conversations or engaging in conversation with year-end tax planning, please don't hesitate to reach out to us. Look forward to having a conversation with you. Please give us a call at 800-928-4001. Scan the QR code above. We'd love to have a complimentary Next Steps meeting with you to discuss part 1, 2, and 3 of your year-end tax planning. Thanks for spending time with us, my friends, and we look forward to seeing you in the next one.